Good morning, everyone. Welcome to this month's educational seminar on another interesting topic of wealth management, TFSAs to help you reach your financial goals. I'm your host, Shrup Singh. I run a wealth management practice at RBC Dominion Securities. Last month, we talked about RRSP. Continuing on previous conversations, we have Amandeep Singh, partner at Cloudiverse CPAs, joining us again today to shed some light on the common question from Canadians. Can TFSA help me achieve my financial goals? Before we begin, if you have any questions for us, please feel free to send us an email as posted on the screen today. Welcome back, Aman. How are you doing?
I'm doing great, Dhruv, and thank you again for having me here.
I believe you must be getting busier with the tax season now.
Absolutely, you are right. It's crunch time.
Aman, after the RRSP season was over, many clients have been reaching out and looking for other opportunities to build their tax-sheltered growth for their wealth. And, tax-free savings account is another vehicle to achieve this goal. However, for the benefit of our audience today, Aman, could you please share your insights to what is TFSA and how it is different from an RRSP?
Yeah, so that's a very common question. So TFSA stands for tax-free savings account. If I want to put it simply, it is an investment vehicle, as you said. And on the other hand, RRSP is a tax deferring vehicle. So when the taxpayers open a TFSA, they can contribute to the plan as they see fit. But first, subject to the annual contribution limit, which is $6,000 for 2020. They can invest in TFSA in a wide range of investment products. For example, exchange traded funds, stocks, guaranteed investment certificates, etc. But remember, unlike the RRSP, the annual contributions aren't tax deductible. So, the proceeds, however, are never taxed too. Their investments in the TFSA grow tax-free, but they can withdraw them without a tax hit.
Yeah.
Whereas in RRSP, when you contribute, you get a deduction, right? But when you withdraw it, then there's a tax hit there, right? So I think I have a question here. Rup, you mentioned about your network regularly look for a tax-efficient and tax-sheltered growth opportunities. So for your clients, how do you guide them in making the decision towards RRSP or TFSA or both? Any some light on that?
Yeah, well, thank you. Again, this is a very common scenario that I come across in my interaction with my clients. For these kind of questions, I always defer them to connect with their accountant when it comes to selecting one over the other. Most of my high net worth clients have both RRSP and TFSA investment accounts with me. But certain clients leverage the opportunity of dollar cost averaging by making monthly contribution towards their RRSP. Once they get the tax refund from the CRA after filing the taxes for the previous year, they use that refund to make one-time contribution towards the TFSA. Whereas, other clients have set up monthly contributions for both RRSPs and TFSAs. So, while working on the financial plan for my clients, doing the cash flow analysis and the budget analysis, that's where we determine if the client would be comfortable making the monthly contributions towards their RRSPs and TFSAs, or they would prefer to do one time. Also, we also ask them to, check on their my CRA website to confirm what the limit is, and divide that number by 12, or divide that number by 4 if they want to do a quarterly one. And then also the accountant is another source. Their accountant will be another source where they get the information from. Yeah, Aman. Speaking of which, in our first episode on RRSP, we discussed how RRSP room is calculated. Can you let our listeners know how the TFSA room is calculated? You know?
Okay, so that's a good question. See, Roop, you automatically accumulate the contribution room each year. And that's starting in 2009. So if you're a resident of Canada at any time during the year, and you were at least 18 years of age, so you accumulate the contribution over those years. So actually, you don't have to open a TFSA or file an income tax return to earn the contribution room, just like we used to do it in RRSP. So here it is different. Your income level also has no bearing on your contribution room. So you could have like any income, but you still have TFSA contribution room, unlike RRSP and AIM. So you can confirm your contribution room by either contacting the Canada Revenue Agency, or you can also find it online if you're registered for CRA's My Account services. I think you already mentioned that earlier.
Oh, yeah. So just to reconfirm, TFSA started in 2009. If you're a Canadian resident and you are over the age of 18, and up until, let's say, 2021, every year, if you have the room available unless you have already contributed to the TFSA. And there is no limitation in the sense of what kind of earnings you have, how much you earn, whether you earn $1 million a year or you earn $100,000 a year or $40,000 a year. The limit remains the same for every Canadian. Is that correct?
Yeah, that's right. Yeah.
Okay. Yeah. Just a quick thing. We have a question from one of our audience today. They would like to know if they can over-contribute or if there is a penalty for over-contribution in the TFSA. It's a very interesting one.
Yeah, because the TFSA is so attractive to many investors, they tend to sometimes over-contribute, right? So, but the over-contributions occur when people contribute more than the TFSA contribution room, which we discussed. Now, if they do that, then they will be subject to a tax of 1% on the highest excess amount in the month. For each month, they are in an over-contribution position. The 1% tax will continue to apply for each month the excess amount remains in their TFSA. So, when we are doing planning, we always say that we have to check what is the TFSA contribution room and then contribute accordingly. Otherwise, there's no use paying the penalty on the excess amount.
Is there a way that you would suggest that the taxpayer can do something to stop the tax from occurring?
It's a very simple solution. So to stop the tax from accruing, they just need to withdraw the excess amount, right, from their TFSA or receive new contribution room to absorb the over contribution, which occurs on January 1st of the following year. And if, just in case our audience are wondering, they don't need, there's no CRA form that needs to be completed to withdraw the exact amount. They can just go and talk with the banker and withdraw the exact amount.
There's another question popped up here from one of the audience. And this is a very common one. I have also come across this question quite a few times. They are asking if they can buy a property or do a high-frequency trading or business through a TFSA account because it's tax-free.
Okay, so that's some creative ideas from various audience. See, the CRA does not allow, unfortunately, that a user can carry out a business inside the TFSA. So if someone is a day trader, then they need to be aware of trying to do that. See, high-frequency trading raises alarm bells with CRA. The CRA conducts random audits to catch anyone abusing the account and making quick profits by buying and selling stocks. And, once the CRA suspects a taxpayer of generating business, not investment income. So if you're having investment income, it's a different story. But if it's kind of a business, And it might flag their TFSA and impose taxes on the income earned inside TFSA.
Yeah, interesting. I mean, on this note, could you please share some light on whether Canadians can reduce their income through income splitting strategies while using the TFSA?
Income splitting while using TFSA. Yes, yeah. So as an income splitting strategy, you can make a gift to your spouse, common law partner, or adult child to contribute to their TFSA. Now, many might be worried about the income attribution rule. So, see, any income earned or capital gains generated within the TFSA will not be attributed back to you while the funds remain in the TFSA. So if you have a lower income adult family member, this strategy may help them earn tax-free investment income and save for retirement or other goals.
Okay. So
yeah,
that's a good strategy for sure. So if you have an adult child over the age of 18, you can start. You may be interested in opening a TFSA account and start contributing if you have access cash, or even the low income spouse as well. You can contribute towards their TFSA as well.
Yeah, that's right. Yeah.
Aman, speaking of relationships, so can you share your thoughts on the tax consequences resulting from, say, a breakdown of marriage or a common law partnership? How does that work?
Breakdown of marriage. Yeah. So if there's been a breakdown in the client's marriage or a common law partnership, they can transfer an amount directly from their TFSA to their former spouse or common law partner's TFSA without any tax consequence.
Okay.
So, and because in these kind of situations, there are some special rules which CRA has said that there will be no tax consequences as long as it's done the way it is meant to be. So, the financial institution must complete the direct transfer for that.
Yeah.
So the financial institution have a certain way of doing that. Yeah.
Okay. No, I think, Aman, this is really interesting. You shared some interesting light on the TFSA. And again, I will not take much of your time. And thank you for giving your Saturday morning to us. Thank you again, Aman, for joining us. This session was very informative for us and for a few of our listeners as well.
Thank you, Roop, and thank you everyone for joining.
Yeah. This brings us to the end of our session today. I want to thank all of our attendees for taking time to attend the seminar. If you have any additional questions, please feel free to reach out to us. The email is on the screen, and if you want to learn more about RBC Wealth Management Services or about Aman's Cloudiverse CPAs services, feel free to connect. Thanks all. We will see you in the next seminar on the another relevant topic of wealth management, and have a wonderful weekend.